I think it absolutely has to have an impact at some stage. But at this stage, I don't think we have seen any changes.
Most businesses still see cyber as an IT risk as opposed to like a possible financial risk.
So the old saying is, it's not if, but when. Couldn't be more real at the moment.
Hello and welcome to Insurance Business TV for our first cyber insurance power panel of the year for New Zealand. We're going to look at what brokers should know about the current market trends, where the main exposures are, and the impact of the US-Iran conflict. We've assembled our panel of experts. Damien Schade is Client Director, Financial Lines at Lockton. Decklyn Thomson is Associate Director with GSI Insurance Partners. And we have a new panelist. Tom Arnott is Cyber Specialist with Marsh. A special welcome to you, Tom.
Thanks, Danny. Excited to be here.
Yeah, great to have you. And of course, welcome to our two regulars as well. Let's start with you, Damien. How is the cyber market looking right now? Is it still soft? And what's standing out for you in terms of market trends, if anything?
Yeah, nice to be back, Danny. Thanks for having me again. Look, 2026 is a little bit status quo to kick the year off. The market still remains relatively competitive. Still, insurers are being relatively aggressive at trying to retain their business. We haven't seen sort of a significant number of large claims within the last few months. Just continue to see a lot of the social engineering, the smaller type attritional claims. So the market still remains relatively buoyant, and there's capacity and options for our clients at the moment.
And Declan, turning to you, what are you seeing that's new and trending, if anything?
Yeah, thanks again for having me, Danny. I do agree that we're still in a relatively soft market. I know that there is still insurers are still looking to improve on their underwriting discipline in terms of tightening cybersecurity requirements. I'm liking that we're seeing a lot of insurers be proactive with some of their cybersecurity reporting and assessments that they're doing even ahead of renewals or when we're seeing submissions through. So I think that there is tightening up happening around underwriting criteria and that kind of thing. But in terms of pricing, I would say that we're definitely still relatively in a relatively soft market. Yeah.
Thanks, Declan. And Tom, coming to you in third place there, what are you seeing that's trending?
Yeah, Danny, I'm going to sound a bit like a broken record here, but I agree with the other guys. Definitely still a soft market. I think we're going to see the market conditions remain relatively stable throughout 2026. I don't envision any major changes. From a pricing perspective, we're seeing anywhere from -5% to +5% at max. But as a whole, it's relatively consistent, and I think it will remain that way. But yeah, we'll monitor it.
And Tom, sticking with you, if you guys are sort of seeing the market as relatively soft at the moment, what should brokers be doing now? Because presumably there'll be an upturn at some stage. Are you making sure everyone's getting ready for things, or is it too early to do that at this point?
Yeah, it's more of a constant process, continuing to ensure that clients are maintaining insurability and just taking them through that journey is key. We've been doing that for years. We'll continue to do that. For when the market does inevitably turn, you want your clients to be in the best shape possible. And we're doing things like encouraging onboarding calls with incident response vendors, familiarizing clients with their hotline numbers, just little immediate things that they can be doing to increase their resilience and awareness for when that market does turn inevitably. Yeah.
And Damien, what about you? Are you doing the little tweaks, or what are you watching at the moment if the market ends up turning?
Yeah, I think so. I think you've got to take advantage when the market is like it is to squeeze as much coverage as you can out of insurers, because there's opportunities to be able to get those extra limits, to get those extra sub-limits and drive the coverage position. But I agree with Tom's point around making sure that the cyber resilience piece is in line as well. So you've really got to it's almost preparing for the inevitable, whether that be in 6 months, 12 months or 2 years, making sure the program's as robust as possible and also the risk management aligns to that from a cyber perspective.
And Declan, are you preparing for the inevitable?
I guess so, in a way. I think conversations with clients can sometimes be, you may as well sort of take advantage of the pricing now and bank some of that while you can. But at the same time, it's having conversations with them around implementing, better cyber risk management, better IT security, so that, things that like MFA, patching, backups, EDR, those kinds of things, insurers are going to be caring about, either later this year or in a few years' time. So it's just making sure that when the insurers do tighten up, they're still in a favourable position to kind of achieve some favourable pricing, really. So, yeah.
And Declan, sticking with you in terms of achieving favourable pricing, that's everything to do with exposures. What exposures are you most worried about now that your clients might be underestimating?
Well, it's a good question, Danny. I think in terms of exposures, I mean, there's always the classics kind of social engineering, like invoice fraud, those kinds of more SME maybe style risks. But I think one thing that I guess we're finding is the business interruption loss following cyber events can be, a thing that a lot of clients underestimate. It's really easy to think about, picture cyber as being ransom payments and hacking and that kind of thing. But most businesses still see cyber as an IT risk as opposed to like a possible financial risk. So I think that the whole business interruption conversations around cyber are sort of improving, and it's definitely something that we're finding at least is being underestimated more so in the cyberspace.
And Tom, turning to you, what are you concerned about that your clients might be underestimating?
I'd have to agree. It's a big business interruption risk at the moment. It's probably the most common claim that we're seeing pop up, being business interruption. I think with the most severe being ransomware. But I'm still getting a lot of clients saying, we're not going to get hit by ransomware. We're too small. Why would we be targeted? But there is really no, as we all know, there's no real filter for these threat actors. They'll target anyone at any time. So, but in general, I think this take up of cyber is increasing, but it's not where we want it to be. So as a whole, we're just trying to get clients to take it up more and just be a bit more aware of the policy in general. Yeah.
And Damien, what about you? Is business interruption the one you're worried about?
Oh, yeah, absolutely. I think they make valid points, but I sort of feel that to Tom's point, it's still around increasing that level of understanding and moving away from that sort of typical she'll be right attitude and I've got a managed service provider that handles everything and we're too small and we're not going to be a target. So it's still those conversations and coming up with more of the claims examples and showing them a process and behind it. So that still is sort of one of the big things on my agenda at the moment.
It's an interesting question, isn't it? This whole, it's kind of going to take a cultural shift, if you like, in New Zealanders and Australians, this she'll be right attitude. You summed it up very nicely there. And let's stick with you, Damien, for our last question. It's hard not to talk about the US-Iran conflict, and there's always the thought that this is going to have a big effect on the cyber market and the types of cyber attacks. Are you seeing any changes that are worth mentioning?
I think it absolutely has to have an impact at some stage, but at this stage, I don't think we have seen any changes. There's been a lot of bubbling, a lot of talk, a lot of increased activity. What it is doing from an insurer's point of view is creating that uncertainty, and that's pretty much the thing that insurers hate more than anything, because they don't understand, they can't quantify. So I think that just that whole layer of uncertainty from the political unrest side, and realizing how interconnected obviously the market is. So if there's a cyber event in the Middle East, for example, and you've got clients with, share cloud platforms or share software systems or whatever it might be, there's no real escape from it. So I think that we haven't seen anything significant, but I think that whole underlying bubbling level of uncertainty is probably first and foremost in insurers' minds.
Declan, what about you? What are your observations of the importance or not of this conflict so far?
I'll probably follow on from Damien. I think that we, so kind of similar to the Russia-Ukraine kind of conflict, when that first kicked things off, we saw a lot of insurers definitely in terms of like tightening up their policy wordings and that kind of thing to better protect themselves. But I know that also on the radar was, I guess, like these larger scale cyber campaigns where they targeting, like cloud providers, software vendors, larger cyber infrastructure. So I suspect that'll be on a lot of insurers' radars. Yeah, I guess it's hard to know, and it's probably a bit too early to tell. But I know that some of those larger losses, could be on insurers' radars, and we may see that start to affect pricing. But it's probably a bit too soon to tell.
And Tom, what about you? Is it a bit early to tell, or are you seeing some signs there of what the impact might be?
No, I'm not seeing signs at the moment. I would also say it's probably a bit early to tell. We'll be watching it closely, as with probably the world. However, I think the risk remains the same, but for clients, it's business as usual. We're pushing awareness with clients. We're pushing preparedness. It's more of a, it's the old saying of it's not if, but when. Couldn't be more real at the moment. So if anything, it's just a really heightened awareness exercise for clients. But yeah, again, too early to tell with the market, but we'll be watching it pretty closely.
Great. Thanks very much, Tom. And thanks to Decklyn and Damien. And thanks for watching Insurance Business TV. Bye for now.